Crypto Pirates Daily News. January 23, 2022. Saturday's crypto crash. Why are some cryptocurrencies down more than 25%? Cryptocurrencies such as Bitcoin and others suffer from a crypto meltdown. Should I buy cryptocurrency now, after today's crypto crash? What happened in the aftermath of the past crashes? The cryptocurrency market has lost $356 billion in a single day and $1 trillion in 2 months. After a $31 million hack, the CEO of Crypto.com responds to user complaints about login issues. $1 trillion in value have been destroyed as a result of the cryptocurrency crash. After announcing a ban on cryptocurrency mining, the Kosovo government has caused widespread panic. El Salvador increases its Bitcoin holdings by 410 Bitcoins despite the crypto market's bloodbath. A financial strategist warns that the cryptocurrency market is in the midst of a massive bubble that is about to burst. What does cryptocurrency burning mean? Saturday's crypto crash. Why are some cryptocurrencies down more than 25%? Panic begins to set in. If you thought Friday's crypto sell-off was severe, you're going to be startled to see how trading unfolded on Saturday. Numerous cryptocurrencies are down another 25%, with others falling by as much as 30% in the last day. At 1 p.m. ET, Solana, SOL, was down 26.8% in the previous 24 hours, Polkadot, DOT, was down 24.7%, Chainlink, LINK, was down 24.8%, and the Sandbox, SAND, was down 27.1%. Each of the four is down more than 20% in the last 24 hours of trading. Additionally, Solana is down 37.2% in the last week, Polkadot is down 36.7%, Chainlink is down 38.9%, and the Sandbox is down 39.3%. This week has been difficult for sellers, but Saturday exacerbated the suffering. Why is the crypto market in a state of panic? Panic is the word of the day. The cryptocurrency market has reached such a fever pitch that investors are panic selling, resulting in a slew of concerns. One of the issues is that it clogs up networks that are now unable to handle the volume of traffic. The cost of Ethereum, ETH, gas, or the fees imposed by transaction validators, jumped late Friday afternoon and has stayed higher than usual since. As a result of the traffic overload on networks such as Solana, it became difficult to acquire, trade, or move Bitcoins or underlying positions. I frequently use the level of liquidations as a leading signal of short-term cryptocurrency swings. Liquidations are conducted by brokers or exchanges to hedge leveraged holdings, and they frequently occur during periods of rapid market decline, heightening panic. According to CoinGlass.com, $1.11 billion in cryptocurrency positions have been liquidated over the last 24 hours, although liquidations have slowed to just $79 million during the last 4 hours. Additionally, liquidity will almost certainly have an effect on trade. On weekends, some liquidity providers take a break because the stock market is closed, and the current lack of buyers could exacerbate the problem. Sandbox and Chainlink traded at exceptionally high levels during Saturday's sell-off. This makes sense given their smaller market cap, which exposes them to broader and more rapid price swings than their more mature counterparts. Polkadot and Solana are more steady due to their greater market presence, but it has not protected them from this weekend's panic. Where is the lowest point? The difficulty for cryptocurrencies is that there are no underlying fundamentals. There is no price or earnings ratio, no balance sheet assets, and no value-oriented investors awaiting an opportunity to profit from the fall. Positions are also concentrated among a small number of holders who may not be actively trading, implying that there is less cryptocurrency actively moving in the market than market capitalization. Infer it. We just do not know when we will reach rock bottom, and I fear that the situation will deteriorate further over the coming weeks and months. The absence of fundamentals may force some crypto traders to abandon the market entirely. The good news is that numerous cryptocurrencies have gradually enhanced their blockchain's usability and functionality. NFTs are a starting point, as are games like the Sandbox, and additional innovations are planned. This is what will ultimately drive value in cryptocurrencies, but it will take decades, and in the meantime, prices continue to plummet with no end in sight. Cryptocurrencies such as Bitcoin and others suffer from a crypto meltdown. The world's largest cryptocurrency, Bitcoin, has now plunged by more than 50% from its record high in November, adding further negative impetus to the latest cryptocurrency catastrophe. Since Bitcoin's peak, its market value has been wiped out by more than $600 billion, and the crypto sector as a whole has lost more than $1 trillion. Despite significantly bigger percentage losses for Bitcoin and the broader market, this is the second largest decrease in dollar terms for both, according to Bespoke Investment Group. Bitcoin's price fell as low as $34,042.78 on Saturday, a 7.2% decrease, before recovering most of those losses. Ethereum has plummeted by 12%. According to Coinbase, both Solana and Cardano have dropped by more than 17%. Margin holdings were liquidated, prompting extra selling pressure when collateral was seized and sold to pay for margin loans, according to Hayden Hughes, Chief Executive Officer of Alpha Impact in Singapore. Before anticipating any kind of bullishness, I'd wait for a bottom to develop and confidence to return, which might take some time. Bitcoin is suffering as a result of market sell-offs. Riskier assets have suffered around the world as the US Federal Reserve withdraws its stimulus and attempts to rein in inflation, harming both cryptocurrencies and equities. The digital asset industry has detected a significant trend. Cryptos have gone in the same direction as equities and other hazardous assets. Because of its extreme volatility, cryptocurrency has historically been subject to these types of sell-offs. However, given the market cap size, both raw dollar and percentage metrics are vital to analyze, according to bespoke analysts. Coinbase fell over 16% at one point on Friday, its lowest level since its initial public offering in the spring of 2021. According to CoinGlass, a cryptocurrency futures trading and information platform, over 239,000 traders liquidated their positions in the last 24 hours, totaling $874 million. According to Noah Lakeson, head of market research at Genesis Global Trading, while liquidations have increased, the numbers are relatively modest in comparison to previous drops. Cara Murphy, Chief Investment Officer at Kestra Investment Management, believes cryptocurrencies have a life of their own but that the latest collapse is sensible. It makes reasonable that people will migrate away from cryptocurrency as they retrench a little bit and look for something a little bit more substantial, she added. Should I buy cryptocurrency now, after today's crypto crash? What happened in the aftermath of the past crashes? Today's crypto crash, the 2017-18 crash. The Federal Reserve said in September 2017 that it would begin lowering the size of its balance sheet, a process that would last until early 2019. During this time, Bitcoin rose from $3,000 to $18,000 in 3 months before plummeting to $3,000 over the next 13 months. It was then amplified by 3 over the next 12 months, then again over the next 18 months. The crypto industry was significantly smaller back then, about 5 to 10% of what it is now, roughly $100 billion, with Bitcoin alone worth $65 billion. The wealth of American households was approximately $92 trillion at the time. U.S. family wealth increased to $114 trillion in the second quarter of 2019. So, from 2017 to 2019, Bitcoin values more than doubled while U.S. household wealth increased by approximately 24%. The current value of American household wealth is at $150 trillion. Not to add that cryptocurrency is traded globally. Global wealth has risen from roughly $280 trillion in 2017 to more than $400 trillion now. The Bitcoin market is now worth approximately $2 trillion. In terms of national and global wealth, it accounts for less than 1%. Here is a synopsis. Prices doubled in 18 months the last time the Fed reduced the size of its balance sheet. While the rate of global wealth growth is expected to decline, Bitcoin accounts for less than 1% of global wealth. As a result, there is plenty of space for growth. Cryptocurrency is increasingly finding its way into the wallets of wealthy and middle-class people worldwide. There have been numerous published surveys on the subject. Should I buy cryptocurrency now, after today's crypto crash? Will history repeat itself now? We'll find out in time. But what we know should give us hope for what comes next. However, the traditional debates about the utility of cryptocurrencies will continue to influence prices and valuations, so they cannot be disregarded. The trade is now yours to make. Should I buy or sell? The cryptocurrency market has lost $356 billion in a single day and $1 trillion in 2 months. According to CoinMarketCap data, the value of the cryptocurrency market was $1.61 trillion on Saturday, an 11.8% decrease from the previous day. Over $350 billion was lost in one day as a result of the price drop. This comes just 2 months after the crypto market's worth increased to $2.94 trillion from a record high of $68,000 for Bitcoin. Bitcoin, the world's most valuable cryptocurrency by market capitalization, has dropped below $35,000, its lowest dollar value since August 2021. At 12:52 GMT plus 1 on Saturday, the cryptocurrency's value had dropped by more than 9% to $35,104. The price dropped to $38,147 on Friday after Russia's central bank suggested a ban on all cryptocurrency operations in the nation. Ethereum, the second largest cryptocurrency by market capitalization, plummeted 14% to $2,433. During China's crackdown on crypto miners in May 2021, the price of Bitcoin also plummeted. The Central Bank of Nigeria, CBN, has issued a warning to anyone who invests in cryptocurrencies, stating that they are not legal cash in Nigeria. Because of the anonymity of virtual transactions, he claims that digital currencies like Bitcoin, Litecoin, and others are commonly utilized in terrorist financing and money laundering. The bank directed banks to terminate the accounts of persons or businesses involved in Bitcoin transactions within their systems in February 2021. After a $31 million hack, the CEO of Crypto.com responds to user complaints about login issues. Crypto.com CEO Chris Michalek has replied to complaints from thousands of users about difficulties entering back into their accounts following the company's forced adjustment of security settings following a hack last week. On Monday, the corporation stated that 483 users had illicit cryptocurrency withdrawals from their accounts, costing a total of $4,836.26 ETH, $443.93 BTC, and about $66,200 in other virtual currencies. This was roughly $31 million at the time of the incident. In a statement, Crypto.com claimed it revoked all client 2FA tokens and applied additional security hardening measures, which prompted all customers to re-log in and set up their 2FA token to ensure that only permitted activities would take place. However, many of individuals have resorted to social media to express their dissatisfaction with their inability to access their accounts. Hundreds of people tweeted at Crypto.com, requesting assistance and claiming that support channels were down. When contacted for response, Crypto.com led ZDNet to a statement issued by Michalek on Twitter on Friday evening. In 95 out of 100 cases, if you can't get back into our app when access is reset this week, you're simply using the wrong email to log in. We don't allow duplicate accounts with the same phone number, so if you use the incorrect email address, you'll be blocked, Michalek wrote. He advised clients to check their inboxes for emails from Crypto.com, adding that whoever possesses it is the one you should use to log into the app. Please contact our customer service if you can't find it or no longer have access to it. We'll re-verify your identity. We assist users one by one in these situations, but it takes time due to the vastness of our platform. In addition, our team is working on a new version of the app that precisely communicates it through UI and UX changes, he stated. Finally, know that your cash are safe and ready for you to log in, with the correct email. The explanation did little to placate irate clients who demanded access to their accounts. Although PeckShield stated that roughly $15 million was washed in a coin-operated cup, the business originally disputed that cash had been taken. Michalek was obliged to come on Bloomberg on Wednesday to confirm that 400 people had been attacked and their ability to withdraw funds had been revoked. Crypto.com has set up a program to compensate users who have been affected by the hack with up to $250,000 in compensation. The terms and restrictions may vary by market depending on local regulations, according to the company, and Crypto.com will make the final decision on qualifying requirements and claim clearance.
$1 trillion in value have been destroyed as a result of the cryptocurrency crash. How are folks able to make ends meet? According to Bloomberg, the Crypto Meltdown this week has reached an astounding round number. It has now lost more than $1 trillion, trillion with a T, a staggering quantity, in value since late last year. Bitcoin alone lost more than 12% of its value on Friday, plunging to its lowest level since July 2021, at a pitiful $34,000 at the time of publication. This implies it has lost more than 45% of its value from its high in November. Other coins have lost the same amount of value, if not more, in the same time frame. According to Bespoke Investment Group, this is the second greatest drop in the currency's history. It offers a sense of the degree of value destruction that percentage decreases can conceal, Bespoke analysts told Bloomberg. Of course, cryptocurrency is subject to these types of sell-offs due to its naturally higher volatility in the past, but given how enormous market caps have reached, the volatility is worth considering. Help! The current crypto fall is especially startling when contrasted to one of the darkest days in US history, October 29, 1929, sometimes known as Black Friday, when the stock market plummeted, wiping out almost $14 billion in wealth. Only a few months later, by the end of 1929, the losses were estimated to be in the $40 billion range. To put this in context, $40 billion in 1929 dollars lost in a similar time span to the present crypto meltdown equals nearly $600 billion in 2022 money. That means the latest crypto market fall has cost more than the 1929 losses that triggered the 1930s Great Depression. Given those startling figures, it's worth thinking about how the crypto community can strive to reduce its trademark volatility. The Wall Street Journal just published an op-ed on crypto regulation by former Attorney General Makan Delrahim. Delrahim stated that blockchain regulation has been long overdue and that enacting it will better safeguard individuals and the market. He stated that in order for the blockchain to reach its full potential, engineers and policymakers must work together. Government regulation might entail a plethora of specific policies, but eliminating frauds, educating investors about hazards, and stabilizing markets by converting the value of crypto to IRL currencies appears to be a good idea.
After announcing a ban on cryptocurrency mining, the Kosovo government has caused widespread panic. The Republic of Kosovo's government has provoked alarm among crypto miners in the Balkan country by declaring a temporary ban on all crypto mining activity. According to The Guardian, cryptocurrency miners are selling mining equipment at the lowest possible price in an attempt to recuperate part of their investment following the country's prohibition. As part of emergency steps to address a rising energy crisis, the government ordered late last year an immediate halt on all crypto mining operations. According to the article, the country's Facebook and Telegram crypto groups were flooded with posts from miners looking to dispose their rigs at reduced costs. Kosovo has been an appealing destination for European-based miners because of its vast lignite reserve, low-quality coal, and government subsidies on coal and fuels. Despite the fact that the restriction is thought to be temporary, crypto miners in the country are either migrating to neighboring places or panicking and selling their equipment. In light of chronic energy shortages, Kosovo's economy minister, Dr. Ante Rizvanoli, called the latest ban a no-brainer. She stated, "We have allotted €20 million to subsidize energy, which will most likely be insufficient, and taxpayers' money will be used to subsidize electricity use. On the other hand, there is crypto mining, which is a very energy-intensive and unregulated industry." Crypto Cupo, a cryptocurrency investor and administrator of several of the country's online crypto forums, slammed the government's move. The anonymous user claimed that many miners had invested substantial quantities of money in their mining equipment, even taking out loans, and were now being treated unfairly. El Salvador increases its Bitcoin holdings by 410 Bitcoins despite the crypto market's bloodbath. El Salvador, the world's first jurisdiction to legalize Bitcoin, adds 410 BTC to its holdings. El Salvador makes a $15 million purchase of 410 Bitcoins. While the plunge to $35,000 has compelled some to liquidate their holdings out of fear of more losses, it has also prompted many to increase their BTC purchases. El Salvador, a small country in Central America, is one such example. El Salvador, under by President Nayib Bukele, has reintroduced practically every dip following the legalization of Bitcoin. El Salvador missed an opportunity last week when Bitcoin fell to $39,000, and President Nayib Bukele expressed sadness, citing a squandered opportunity. However, as Bitcoin fell further to $35,000 on Friday, El Salvador was able to successfully bring the dip. Nayib Bukele, President of the Republic of South Africa, declared via Twitter, "Nope, I was incorrect, I did not overlook it." El Salvador recently purchased 410 bitcoins for less than $15 million. El Salvador currently owns a total of 1801 BTCs following this recent acquisition, valued at $15 million. As a result, El Salvador's BTC holdings have increased in value to more than $60 million. Notably, El Salvador's Bitcoin holdings have declined by around $20 million as a result of Bitcoin's recent price behavior. While El Salvador's crypto policy is undoubtedly a cause for celebration for crypto fans, certain individuals and institutions have criticized President Nayib Bukele for his excessive bullishness towards Bitcoin. Bitcoin drops below the $35,000 level. Bitcoin, which is currently trading at $34,900, had just struck its 6-month low of $34,300 seconds earlier. Bitcoin is currently down 10% day-to-day, 19% week-to-week, and 27% month-to-month. Whereas, Premier Cryptocurrency is down 49% from its all-time high of $68,700. Additionally, the market is undergoing a significant correction. The total market capitalization of all cryptocurrencies is currently $1.60 trillion, down 13% in the last 24 hours.
A financial strategist warns that the cryptocurrency market is in the midst of a massive bubble that is about to burst. According to Jeremy Grantham, a renowned investment expert, all markets, including the cryptocurrency market, are in a gigantic bubble that is about to burst. As Bloomberg noted, the senior investor believes that the market increase in cryptocurrency over the last several years indicates the end of a market bubble that is about to burst. Grantham adds that even if the Federal Reserve Bank intervenes, the situation would not improve. According to renowned investor Jeremy Grantham, cryptocurrency should never be trusted. Jeremy Grantham, like many other doubters, believes that the entire market, from bonds to real estate, equities and commodities, to cryptocurrency, is in a bubble that is about to burst. Grantham, co-founder and chief investment strategist of Grantham, Mayo, and Van Otterloo, GMO, a Boston-based asset management business, stated as much in a recent study. According to the renowned British broker, cryptocurrency inspires no trust in him. He feels like the proverbial young boy who watched the emperor stroll around naked while everyone else praised his non-existent new robe. He encourages investors to avoid the cryptocurrency sector entirely if possible. Cryptocurrencies make me feel increasingly like the boy who stood and watched the naked emperor pass in procession. Numerous prominent individuals and institutions are awestruck by his wonderful coat, which is so technically complex and superior that the average person cannot fathom it and must take it on faith, he explained. I would not do so. In such circumstances, I've learnt to value avoidance over trust. He believes that the US markets are poised for the largest fall in history. He cites several reasons for his pessimistic market forecast, including what he refers to as crazy investor behavior that results in frenzied purchase of meme stocks, meme coins, and NFTs, resulting in large price increases. Additionally, he notes that the February 2021 decline in the value of speculative stocks demonstrates this super bubble. Nothing, he believes, will prevent the market from collapsing, not even Federal Reserve Bank action. Notably, this is not his first prediction of such an event. His most recent forecast has been met with considerable suspicion by other sleuths who have cast doubt on his logic. Crypto enthusiasts believe the market will not drop much further. While Grantham's doomsday market prediction comes during a period of enormous crypto market sell-off, many crypto market participants will question his prognosis of a complete market breakdown. Bitcoin proponents continue to be bullish on the benchmark cryptocurrency, citing many on-chain data indicating that the market may shortly bounce. Indeed, market participants are extremely hopeful that the crypto business will see significant growth in the coming years, with Bitcoin reaching a price of $100,000 in 2022. Meanwhile, Bitcoin is currently trading about $34,600, down 9.75% over the last 24 hours. However, technical analyst Katie Stockton of Fairlead Strategies believes that a price drop below $40,000 does not necessarily portend disaster.
What does cryptocurrency burning mean? If you're new to cryptocurrencies, you've probably found the term coin burn amusing and puzzled why someone would need to do so. Thus, this is how it works. Coin burn is the process by which miners and developers remove currencies from circulation. To put it another way, coin burn is the act of destroying a coin by burning it to the point where it can no longer be utilized, trading or otherwise. The developers and miners will send the money to specialized addresses with inaccessible private keys. Additionally, they should make the proof of burn methodology publicly available to encourage cross-verification. Consider a person who possesses 5 $100 bills and wishes to burn them, literally. Once 5 notes have been burned, they cannot be used or accessed by anyone, including the issuer. Due to the fact that cryptocurrencies are digital and cannot be burned, miners and developers employ digital techniques to render them unusable. The goal of a coin burn is to create a supply shortage, falsely inflating the token price. In the actual world, coin burning would include assembling a stack of money coins or notes and setting fire to them. The term coin burn is same in the cryptocurrency world, except that it refers to the virtual burning of the cryptocurrency. Each cryptocurrency network has its unique mechanism for conducting the burn, but it essentially involves matching the currencies in circulation with unreachable private keys, rendering ownership impossible. The coin burn event is also recorded in the ledger records, rendering the burn infallible. Producers of cryptocurrencies burn coins to increase the value of the coins left in circulation. This is quite similar to what occurs in the oil business. When the price of a barrel of crude oil falls as a result of a supply glut and insufficient demand, oil-producing countries restrict production, forcing prices to climb again. The same supply and demand dynamics are at work throughout the coin burning process. The primary objective of coin burn is to preserve price stability by limiting supply. Money demonetization and stock buybacks are both examples of similar processes. When developers/miners burn the currencies, the amount of coins available in the digital currency market falls. As a result, the value of the coin will grow, at least theoretically it should. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.